Hello, it's Zach here with Keller Williams Realty. I'm here with Christy Hardy with Atlantic Coast Mortgage. We're going to talk about mortgage rates today and interest rates and what's going on in the current economy and how that's affecting you buying a home or even you selling a home. So thanks for jumping on the video today, Christy.
Thanks for having me.
Yeah, absolutely. So the first question, how do mortgage lenders come up with these interest rates?
So interest rates, it's actually a little bit complicated, but ultimately interest rates are determined by the economy. And mortgage-backed securities. So basically, when the economy's doing well, that's actually bad for interest rates because people will, put their money elsewhere. What helps is when the mortgage-backed securities are popular and the yield goes up on mortgage-backed security, that actually helps interest rates. But there's several things that affect that, such as inflation. So, high inflation is bad for interest rates. When the economy's doing well, that's bad for interest rates ultimately. I hate to say it, but this is just on a global span. So you may hear of, the Fed is talking about raising rates possibly 4 times this year. It went up, just yesterday the Fed met and there were a few comments that, kind of knee-jerk reaction, mortgage lenders raised their rates, just, knee-jerk reaction. So there's things that happen on a daily basis throughout the day that affect the rates as well. So, but ultimately we're looking at jobs, we're looking at the economy, and basically the 10-year yield.
So, just a follow-up question: is there a better time of month to maybe look at rates?
Great question, and the answer is no.
Okay.
No, it's just a lot of it is about expectations, and what if everybody's acting in line with what's expected, then the rates pretty much are stable.
Okay.
But if there's something that is said out of note or out of expectation, that there will be some knee-jerk reaction. So there actually is no better time of year and no better time of the month necessarily for interest rates. It all just ebbs and flows with how the economy's doing.
Okay, perfect. So we're historically we have low rates right now.
Absolutely.
Currently.
I've been a mortgage lender for 14 years. I never thought they would get this low and stay this low for so long.
Right.
But we are, there is a lot of talk that interest rates are increasing.
Right.
That is what is predicted to happen. So, interest rates are predictably on the rise.
Sure. I mean, when you're at what 3.5 to 4.5, it's
No.
got to go up.
It's like free money.
Yeah, exactly. So, what does that mean? So, if I'm a buyer. And I have, I've gotten a 4.25 rate, and it goes up to 4.5 to 4.75. What does that mean for me as a buyer?
Okay, so if you're just out there looking to buy a house, and let's say I pre-approved you for $500,000 loan amount, and interest rates go up 1 point, so it goes from 4% to 5%.
Okay.
So I've approved you for $500,000. You lose 10% of your buying power with every point of interest rate increase. So, for example, if you were approved for $500,000 at 4%, rate goes up to 5%. You're now only approved for $450,000. So it's a big difference. And let me tell you, there have been times where I have had to, in the spring or summer when there's been a surprising hike in rates. I've had to actually call people and tell them, I had to reduce your amount that you qualify for because the rate has gone up. So it's definitely something, to be on the lookout for.
Do that math one more time for everybody.
Sure. So. For every 1% of interest rate hike, it's 10% less buying power.
Wow.
So you lose 10% buying power for every point in interest rate. Another thing is the affordability of the home. So, for example, if you buy a $500,000 house, your payment, would be like, I actually have an example.
Perfect.
I think you're going to,
I'll
can post this on
later. I'll post
later.
it below in the blog.
So if your interest rate was 4% on a $500,000 house, your principal and interest would be $1,909 a month. If it goes up to 4.5%, your payment's $2,026, and if it goes up to 5%, it goes up to $2,147. That's a difference of $120 a month.
Yeah.
So it's pretty significant.
Absolutely.
Yeah.
Is there any, so obviously a lot of that interest rate is there's out of our hands. We can't control how what our interest rate's going to be.
Right.
Is there a way though for a buyer to help bring that interest rate down at all?
Great question, and absolutely. There's several ways that you can reduce your interest rate as a buyer. Number one, personalized interest rates are based on several factors: credit score, down payment, what type of term that they're looking for. So, for example, a couple of ways as a buyer, if you really want to get the best rate, work on your credit. You can contact me or another reputable lender, and we can kind of advise you. So if I have a client that's at 719 credit score, they get a better rate at 720.
Okay.
So I'll advise them, here's what we might need to do to get you to the better rate. So, credit score definitely plays into it. Amount of down payment helps.
Okay.
The bigger the down payment, the better the rate usually. They can also do an adjustable rate mortgage. That absolutely would help them get a better rate. And shorter term, so like a 15-year fixed versus a 30-year, maybe even a 20-year fixed loan is a little bit better than the 30. And also you can buy down your rate.
Okay.
So you can do something with discount points. So
Okay.
let's say, 4.5% is 0 points. You could pay 1% of the loan amount, like one discount point, and get, for example, 4.25% rate.
Okay.
So we, and I usually will show clients different options
Absolutely.
that fit their needs.
Okay, awesome. Well, thank you, Christy, so much for joining me today and talking about interest rates. I think whether you're a first-time buyer or a repeat buyer, you definitely learned something. I know I did. Any last free advice you can give us?
I mean, just get off the fence. If you're on the fence, you're not sure if now's the right time to buy or later is. I personally think it's a great time to buy right now. There's a lot of pretty good indicators that show that rates are going to be going up, same as house prices.
Awesome.
So buy now while your buying power is good, and that's my best advice.
Why don't you give everybody watching, hopefully there'll be thousands of them, your email address or a way to contact you if they are interested in talking about a loan.
I'll make it easy for you. The best way to find me is www.lendertothestars.com. So
Awesome.
Make it easy.
Awesome. Well, thank you so much. It was
Thank you,
a pleasure.
Zach.
I learned a lot, and I look forward to working with you on a few more deals.
Absolutely. Always great to work with you.